For over 55s, a reverse mortgage is a major financial decision. It will transform your lifestyle, but it can also affect the equity in your home. So the question isn't just which bank has the cheapest advertised rate. The better question is, who is on my side? Who can compare the lenders? Who can negotiate for you? Who can help you avoid paying unnecessary interest? That's the value only a specialist reverse mortgage broker can deliver. At Seniors First, our role is simple. We help older Australians make more informed decisions, and we fight to help you get a better outcome. One of the clearest ways we help is by negotiating rate discounts. Fact: in 2026, nearly half of Seniors First customers received a special discounted rate that was not publicly advertised. The average discount off the lender's published rate was 0.40%. With a reverse mortgage, remember, interest is added to the loan balance and compounds over time. That means even a small rate difference can become a meaningful saving. For example, on a $150,000 reverse mortgage, a 0.40% rate discount could potentially save around $12,000 in compounded interest over 10 years. That's money that may stay in your home equity rather than being paid to the lender in interest. The interest rate is only part of the story. The biggest saving often comes from how the loan is structured, and this is where Seniors First does something different. We use our exclusive Home EquiSaver method to proactively structure reverse mortgages in a way that helps minimise your interest costs over time. This matters because with most reverse mortgages, you only pay interest on the money you have actually drawn. So if you don't need all the money on day one, it may be better to keep some funds in reserve and draw them gradually as needed. That sounds simple, but it can make a huge difference. Here's why. A lender may approve you for a certain amount, but that does not mean you should take the full amount upfront. In fact, the more money you draw upfront, the more interest can start compounding straight away. And lenders don't generally have a strong incentive to help you minimise that. At Seniors First, we look at it differently. So instead of asking, what is the maximum you can borrow, we ask, what is the smartest way to access the money you need while preserving as much of your home equity as possible? That is the purpose of Home EquiSaver. It helps us work with customers to separate their needs into money needed immediately, money needed to boost monthly cash flow, and emergency money at call that's only used if circumstances change. Here's a simple example. Let's say a borrower has access to a $100,000 reverse mortgage facility. If they take the full $100,000 upfront, the interest cost over 10 years could be around $121,000, based on an 8% interest rate. But if that same $100,000 is drawn gradually through an installment plan, the interest cost over 10 years could be around $52,000. That's a potential saving of around $69,000 in interest. And don't forget that based on historical trends, your home value should also continue to rise over time. In fact, strong growth in house prices can more than offset interest costs. Home values rose by over 400% over the last 25-year period, averaging roughly 6.4% to 6.8% annual growth. Every case is different, but at Seniors First, we have 20 years experience in loan structuring. We've applied the Home EquiSaver approach to thousands of reverse mortgage loans. We believe it's helped our customers save millions of dollars in potential compound interest. It's a clear illustration of the value only a specialist reverse mortgage broker can deliver. Reverse mortgage comparison is far more complex than most people realise. Seniors First research has identified more than 150 points of difference between the top reverse mortgage lenders on our panel. That includes differences in product features, eligibility rules, credit policies, and post-settlement procedures. And here's the problem. Most of these lender policies are not published online. So if you go directly to one lender, you may never know whether another lender would have been a better fit. You could waste months applying to the wrong lender. You could be declined unnecessarily. You could borrow less than you might have qualified for elsewhere. Or you could end up with a loan that is approved but not structured in your best interests. That's why specialist guidance matters. At Seniors First, we deal with reverse mortgage lenders every day. We understand the hidden differences, we know the policy traps, and we help guide borrowers toward the most optimal lenders and loan structures. Seniors First has been helping over 55s release home equity for cash since 2006. We are Australia's #1 reverse mortgage broker. 20 years experience assisted more than 7,000 Australians. 4.9-star Google rating, 600 plus reviews. Every day, our team helps older homeowners compare lenders, negotiate rate discounts, understand eligibility, structure loans to minimise interest costs. That experience matters because in reverse mortgages, the small details can have a very big impact. And for those who aren't quite ready for a reverse mortgage yet, we've even built an app. SERA stands for the Seniors Equity Release Access Hub. SERA gives you free access to videos, calculators, and support tools so you can build confidence at your own pace. So if you're feeling uncertain, that's okay. And if you are comparing rates and trying to reduce costs, that's smart. But before you go directly to a lender, speak to a specialist reverse mortgage broker first. At Seniors First, we advocate for you. We help you compare your options. We fight for rate discounts where possible. We actively structure the loan to help minimise your interest costs. And we guide you through the 150 plus points of difference between reverse mortgage lenders. So, if you want to potentially save thousands, protect more of your home equity, and feel confident in your financial future, get a specialist broker on your side. To learn more, visit seniorsfirst.com.au.